Hey, welcome back, everybody. So, this is going to be the watch list for Monday, March 3rd. Hard to believe that we are actually already 3 months into the new year and lots of things going on. So, let's get to the economic news for the upcoming week. Just a couple things that you're going to want to pay attention to while the market is open is going to be this manufacturing PMI that will drop 15 minutes into the market open, and then 30 minutes into the open is going to be construction spending and ISM manufacturing. Construction spending usually doesn't move the market, but the one we are going to want to watch is this ISM manufacturing number to see if that can jolt the market one way or the other. Clearly, the market is on edge with the VIX being above 20 predominantly all week. We did drop down to about 17, but then went back up to 20, 21, 22, and a lot of it has to do with the geopolitical uncertainty as to what's going on, primarily between two things. Now, the United States and Ukraine. So if you saw the news headlines as to Zelensky's meeting with Trump this week, that clearly did not go well by any stretch of the imagination. And I think you'll have to watch and see, does the U.S. pull all support from Ukraine whatsoever? So clearly, the United States is taking a position that the war needs to end, and Zelensky needs to succumb to what Putin, and now ironically, what Trump wants with the mineral rights. So again, I'm not being political, but I am stating what is driving the fear in the market. Okay. Tuesday, really no news. We just have a couple of Fed governors, so I don't think that will really move the market. Wednesday, ADP employment numbers are going to be very important that we're going to want to watch before the bell. And then once the market is open, we have the final PMI numbers that are going to come out for the month of February, as well as factory orders and ISM services. So those will move the market. Be aware of them. Probably wouldn't want to be in a trade at least 5 minutes before the news drops, because you will see nothing other than chop. The important numbers are going to be Thursday and Friday. That's going to come in with initial jobless claims, and then the overall trade deficit and wholesale inventories. Those are going to be big numbers, as well as the jobs report. So Friday will be a very big day for the market. That's going to talk about not only jobs, but it's going to talk about the unemployment rate. Is it going up? U.S. hourly wages, what's happening with wages year over year, and then we have a lot of Fed governors speak. So Friday could be quite volatile. This week was absolute volatility in the market. Again, going back with the VIX and, kind of how we saw this precipitous run up into everybody watching NVIDIA, right? What was going to happen with NVIDIA's earnings? It held until it didn't hold, and then we just had this huge sell-off in the market toward the end of the week. And then on Friday, interestingly enough, they rallied it all the way back up into the close, which was somewhat unexpected, but yet to the point that I think where we saw the sell-off was right around the Zelensky-Trump conversations that were happening in the middle of the day, sold it off, and then literally in the very last 20 minutes, they pushed the market, dramatically from 588 all the way up to 594. This was a huge rally buy into the end of the day. So now what we're going to want to watch for Monday is, can we get above this 594.43 to head higher? Or was this just a really quick relief rally before we head lower? So overall, again, when volatility is above 20, sometimes some of the best things that you can do is not play the ETFs, meaning SPY and QQQ, but what you might want to look at is playing some of the individual names. And I would not be playing a Tesla or an NVIDIA. What you could do is play some of the slower movers like an Apple, Google, Meta, Microsoft, AMD, and the like. So you'll also see on the Qs, again, that huge precipitous sell down on Thursday, really kind of pushed it up, tanked the market all the way down. And then on Friday, a lot of market chop in the morning until we found a base and then moved higher. A lot of you are asking about price levels and how do you set your price levels? So the one thing that I do not do is reset new price levels when we are having extreme volatility and the VIX is above 20. The market is highly irrational. So all of my levels are set on a daily 4-hour and 1-hour time frame. And what I mean by that is I will go look at where do we have a pivot high, and that becomes a daily price level. So this was a pivot high, it's a price level. Pivot high, price level. Pivot high, price level, right? That's what I'll look. And then I'll do the same thing typically on the downside. So where were we reaching our lows? And then the exact same thing, 4-hour down to the 1-hour. Now, a lot of questions are also around, well, do I use the wick or the body? And the answer is yes. You are looking for where do you have multiple touch points that you can visually see that the market, while it dipped below the line, it did not want to close below the line, right? So a wick is the volatility of price movement, price expansion. But if you look where we're at, where the wick will come up, but then the body will close. Again, the body is closing. Here, we're wicking down, wicking down, wicking down. That tells you there's a lot of buyers here, right? There's a lot of buyers right below this level. So as soon as you get below the level, you don't necessarily want to go short, but your other alternative is wait for the level to recover, and then you go long, and you'll get a much better response to the upside. Now, conversely, on the downside, you'll see we can't get above the level, can't get above it, can't get above it, can't get above it. Once you start to fail the level with some strength, waiting for a retest to come back up on the next candle. Now, clearly, you can't wait 4 hours, right? But you can see it on a 5-minute time frame. That what we will do is we will come down and fail the level. Now, this green candle at one point in time actually did go red. So you can take your put on the retest to go short, knowing that you have to have a stop loss back above the level where you got in. Here, we failed the level. We never got a retest, and then it failed down to the next level. And this was just on extreme weakness. And then you could see that we are holding this level, okay? And then again, more extreme weakness. This candle actually gave you a retest, and then we failed lower, and then we kind of bounced around. So the question is always, well, what if I don't get a retest? Well, then the safest trade is do not take a play. Because if you are buying puts on red candles, you are paying up for volatility, which means you are paying that excess premium to the person who's already in puts. Now, what you can do is once you see a level break, you have to determine, is that break going to hold, or are they going to do what they did here and break it and then push it right back above it? And this is where you will use confluence trading. In watching, if you're trading cues, you ought to be watching Tesla, Nvidia, Apple, Google, Meta, Microsoft, right? What are they doing? Are they above VWAP? Are they below VWAP? Are they in demand? Are they in supply? And what is the overall market sentiment? So if you get inputs here on weakness that you're seeing in, the top 5 stocks in tech, then you would get into your puts and you will not stop out unless you get a candle close above the level. Same thing here. If for some reason you thought this was going to hold, which would be not a very smart move, right? All this weakness. I mean, why would we think that it's going to automatically just bounce higher back to where we were? You ought to be considering that, okay, well, if I'm going to go in puts here, then I'm going to stay in puts until we get a recovery back to at least this prior pivot low right here. Okay, once we get above that, then they're probably going to rocket this thing higher. But clearly, they took us down lower from that point. So this is art. This is not science, right? Maybe the scientific piece is, okay, well, where am I drawing my lines? Why do I think they're there? But then the art is in the entry. Same thing here. You failed, retest, got in puts. You would not get out of your puts until you get a candle close above your 502.96. And then you could have wrote it all the way down to 500.06. The likelihood, again, that 500 is a nice solid number for the market, that they didn't want to break it. They broke it for, all of 5 minutes, but then they immediately recovered it. So this is kind of also an indicator, right, that they want to hold 500. And then when you're watching this in conjunction with SPY, we actually got all the fuel once this held here. Same thing, if you have a firm belief, that they're going to fail it, right? We failed it, we retested it. You were able to take puts here as well if you wanted to. Your stop out would be a candle close above 500. So you could have wrote it all the way down to 497.50 before they rocketed it up. Now, when you're getting into these trades, if they are green, again, when you have volatility at 14, that's very different than volatility at 22. You ought to be dropping, my opinion is, you ought to be dropping a stop at least at break even, if not in profits. Because otherwise what's going to happen is if you don't have a stop in profits, they're going to do this with volatility and you're going to actually have a green trade that turned red. Clearly, again, we failed it. They push up to it and then immediately the next candle, they push right back up to it. So there was no overall failure to go lower. And again, you have a higher low. So this was a low, this low is higher, this low is higher. You should not be taking puts when it is making a higher low, right? And then off it went to the upside. Let's take a look at some of the individual names. So Apple kind of just flirting with this level of 237.49. Again, they push it down. We had a huge, massive wick down here that was probably on very low volume right at the market open. But now they are pushing it up. So I'm between levels 240, 246. I really don't have a trade unless they probably, again, I could do an interim level right here and just kind of look and say, well, what are they doing, on a reoccurring basis with Apple? Well, they're kind of holding this area of interest. And again, that's all levels are, areas of interest, where they used it as some support on a short-term basis, only on a 5-minute reject, reject, reject. So I'll want to at least see us get some momentum in where is the pre-market going to open in order for us to go higher. Okay. Let's take a look at Meta. And again, some of these tech names are slower moving. The lines and the levels are very far apart. Why? Because they're $600 stocks, $200 stocks. So even though it looks different than SPY and QQQ, it's because they just have a wider range when they move. So you just give them more space, right? So when we take a look at Meta on a 1 hour, for the most part, again, my levels are pretty far apart. But you'll see that we were using it as support here. They wicked it down, pushed up. Again, they wicked it down, pushed it up, wicked it down, pushed it up. So the question is always, well, why is your level not down here? It could be, right? I just need to know that between these areas of 541 and 547, again, $5 on a $600 stock is nothing. I don't want to be trying to catch the very bottom. I want to be able to catch momentum back above the level. So therefore, that's where I don't have a level. Now, what I will do is I will also be cognizant with the supply and demand to know, are we in a heavy area of buyers? So the likelihood for the bounce is going to be better than the likelihood for puts. So I'm not going to take puts below the level. I'm going to let the level fail, let it come back up above the level, and then jump in calls to go higher. Now, the exact converse would happen, right? If I'm up here above the level, I don't want to be taking calls when I know there's all these sellers here. I'd rather wait for the level to break and take puts. So use some common sense, right? That the level can be support, the level can be resistance, and then the level can flip. It can become resistance, then it can become support, but you have to be aware of where are the buyers and where are the sellers. Let's take a look at Google. So Google, I have a gap fill up here. Again, I only do my gaps on a 1 hour time frame. You could see that, these are some pretty wide zones. I come all the way down here to 147. Again, I'm looking for where are we getting massive reaction to the upside or, reaction to the downside. You can set levels here in the chop, right? But it doesn't give you as much confidence that they're going to hold this or that they're going to bounce this. This is just a whole lot of noise right here in this area. But if you want, you could drop a level at 160.92. But we're right here at a hard level of 163.70. So again, $2 on Google is nothing that I would be personally paying attention to. But what I want to see is us hold this 168 to go higher. Now, if we fail the 163, I do think we have some room to the downside. But again, I need to understand where are going to be my buyers and then where are going to be the sellers. Okay. So, and this one does not. Why is this one not pulling up for me this morning? There we go. So we are in a fair amount of overall demand. Now, if I want to take calls because I'm above my level, then let's at least break above this pivot right here, interim, right? 30 minute, 15 minute. This is an interim level. It's not a massive level from back here in time. It's just showing us what has happened short term. Well, I want to get above 170, 158. I want to get rid of these sellers to at least take us back up to this next interim level right here. And this is how you would set price targets, right? If I'm going to go long, well, then I want to go long as to where did we bounce it, where did we bounce it, and then where did we sell it off. So I would not want to take calls until I get to 168.43. Again, lots of nice buyers down here, 2 hour, 1 hour zone, strength, right? But I'll take calls here. I do not want to take calls right here, because we have all of these sellers. So what they could do is they could push it all the way back down here, and I would have a much better entry. Now, if they break through this on strength, what I want to do is I want to see us break above the interim level, retest, and then this would be my second price target. So we'll leave that one saved, and we'll see how that plays out. Microsoft, kind of a mess this weekend, right? The Microsoft email servers have gone down. They did a bug fix. And I actually wasn't able to get into my email almost all weekend until this morning. So you can see, even though we're in demand, we have a light, mild area of sellers, 2 hour, 45 minute, and 30 minutes. But what I'm going to do is I'm just going to basically say what I need to do is I'm going to watch this possibly for a reject. Again, I would not take calls here at 396 with a price target of 400. Because this, again, is where it's been, again, rejecting in the past. So therefore, I need to get above 400 with not a lot of sellers to go to 406. And then again, I'm going to be watching overall market momentum. If the Qs are weak, Nvidia's weak, Tesla is weak, then my best bet is going to be to wait to take calls down here or a fail below the level for us to head down. Now, the ideal put trade, again, you can take puts at 389.29 if we fail the level, and just note that your close will be a candle close above the level. That would be your stop loss, because they pushed it all the way down here into the buyers, almost at the very bottom of the zone, before they moved it up in a very short order. The ideal trade is wait for the green zone to disappear, which it will real time while the market is open. Take your put trade on the break below it, and then ultimately your price target is going to be down here at 375. So once all these seller or buyers disappear, then you're going to your next level of buyers, which is all the way down here on the monthly and the weekly, which is going to be a very strong area. So again, the way I would like to play this is if you fail this, again, it's fairly strong. Looks like we got, what, a 3 hour time frame there? 4 hour, 3 hour, 1 hour, right? A lot of overlap of buyers. But if you can get below this and the whole market is weak selling off, then this is your probability trade as to this is where you're going. Even though I don't have a level, my level's way down here at 366. I don't know we're going to get down to 366 because we got 1 month worth of buyers, 1 week worth of buyers, daily buyers. I mean, lots of buyers from the past. But in the interim here, this is where I love to take my trades, is in the open, black, wide open space. Okay, let's look at Amazon. I did a couple trades on this last week. Again, we are now, where are their sellers, right? We're between levels, so technically there's no trade, right? I really want to take puts up here, somewhere in this area. I'll get a much better price. And you don't want to just take puts because you see that there are some sellers. It's only 45 minute, 30 minute, 45 minute. You do have some 2 hour right here, but volatility was high. I would rather, if I'm going to take puts, take them up here. And then if you take puts here, you will stop out of the trade if you get a candle close above your level, okay? But I would be waiting to get puts here versus here. Why? Because if you buy them here and they decide to push it up here on strength, you just lost a ton of money when you could have gotten a much better put price. Same with calls, right? I don't want to be taking calls here to go to the level. I want to be taking calls somewhere down here at 204.90. We probably won't get that opportunity. So then your next best offer is where you have 1, 2, 3, 4, 5 overlaying zones of buyers here, right? So this is probably going to be more bullish on Monday open. I'll watch it and see what happens, than bearish. Now we could get a quick push down, right? And you're going to hit these buyers, and then you can go higher. But ultimately, my buy is always at the level. If you're going to take it just off of supply and demand, just because you have sellers don't mean the buyers aren't stronger. Just because you have buyers doesn't mean that the sellers aren't stronger. And that's how we actually eat through the levels. Okay, let's look at NVIDIA. And then I'm going to look at one more. We're pretty much right at my level, 125. Lots of buyers down here, right? Was this just oversold on panic? All I know is, when it went down, it took down QQQ with it. This would have been a great area last week to pick up some calls, right? We were at the level, tons and tons and tons and tons of buyers down here. And now what we're going to need to wait and see is, can we get above this 125 and then start pushing up to 127? We get above 127, back to 130, above 130, 132, right? So again, just because they're sellers does not mean that we can't eat up all these sellers on buyers' momentum. But we want to take the call trade once we get above the level, we see it retest and hold and go higher. Now, if this thing just goes from a green all the way up here, who cares? There's a million other trades. Don't chase the trade. When you are buying calls on a green candle, you are paying volatility, you are paying premium. When you are buying puts, like you see this and you're like FOMO and you just want to jump into puts, you are paying extreme premium for volatility. And if they reverse it on you in a moment's notice because it's overdone to the downside or to the upside, you literally get screwed. Just wait for it to come down, right? Retest, and you take the next leg lower. But if you're going to chase trades, I'm telling you, I've done this long enough, you're just going to lose money, right? It's just how the world works. Blue, again, interim levels, so I could pay attention to that. Interestingly enough, right, my interim level here is the top of this sell zone. I need Tesla to get back above this 297, 25, and 66 area, right? So I think I took a couple trades on this last week, made some money, lost some money. Tesla's just super volatile. Premiums are really expensive. We do have a gap fill down here to the bottom. I think Tesla's longer term price is down just because when you look at just auto sales in Europe, they're down by 50%. I mean, they are just, consumers are voting with their wallet. Let's just put it that way, right? And let's see what happens on future auto sales. But I just don't think that the world stage is liking how much power Elon Musk is having within the U.S. federal government. So we get rid of this interim level. It's so close. Again, same thing with here. If we break above this, right, you just got to watch 313 for resistance. Ideally, we want it to push above it, retest it, and head higher. So with that, everybody, those are some of the things that I am watching for the month of March. Again, be patient. We really need volatility to start to come in. Right now, volatility is at 19. Okay, that's good. But you will also note that we are in demand. So we'll see how the futures open later on this afternoon. And do they push this back up? We're as high as 2250, right? 2230. You can see right up here. Okay. So we want to be overly cognizant of that. And then again, use your ES and your NQ as some guiding principles as to, directionally where we're going. If you're using the supply and demand indicator, please, please, please make sure you are watching the introductory video. It's under the tools channel in my Discord so that you are fully aware as to what are these zones telling you and why do they change on a 5-minute level versus a 15-minute level, so on and so forth. But you will note right now that we have some upside potential in QQQ. Same thing with NQ. And just with that, find some patience and you'll do remarkably well. With that, have a fantastic Sunday. And for those of you trading with me live, I will talk to you Monday morning. Take care.